So I'm filming this one from the mobile office. Someone hit me up on Twitter today to thank me for a trading idea that I discussed in today's morning meeting. And I thought it was worth actually discussing it because it's one of the simplest trading plays to understand, most successful, can be used at any trading level from beginner all the way up to the most experienced traders. And it's called the second day play. I will discuss it and kind of show you a picture and make a couple of points. But if you want to learn how to trade this setup in more detail, go to tradingworkshop.com or click on the link above. It is one of 3 low risk, high reward trading setups that we teach in our 2-hour free workshop. And I also spend a half hour actually teaching my stock selection process, which got us to be looking at this stock MRNA during Friday's meeting as a fresh in play name, and then today as a second day play. All right, so the stock is mRNA, and it's one of many companies working on developing a vaccine for the COVID virus. And it received the news. The reason why I made it to our morning game plan, if you take a look at the morning game plan from Friday, was it was one of 2 stocks with fresh news that we discussed, and they were awarded a $500 million contract to develop this vaccine and scale up manufacturing. Now, $500 million is not chump change. So my first thought when I see this is like, wow, this is probably real. There's a lot of things these days. You see a lot of these pump and dump stories and stocks that are total BS, and there's not much there. And so if we look at the chart from Friday, what we can see is it had a large gap. And when you have some news like a contract like this in a biotech and a stock has a very large gap, quite often you'll get profit taking right on the open. You'll get some sort of flush, and it'll come down to more reasonable prices, and then some people will start to buy it on day one. But quite often what will happen is on day one, if it just holds the gap but doesn't really go up more, on the second or third day, you may have larger money, larger funds come in and create an uptrend. And that's kind of was my comment in the morning meeting. Like, the analysts, I've had a chance to look at it over the weekend, talk to the portfolio managers at the larger funds, and they can make a decision. They're not day trading stocks. They're not, momentum trading these gaps. These larger funds, they're looking, they're looking at the news. They're doing analysis. The analysts are looking at it, then they're communicating in the next day or two with their portfolio managers, and then they're starting to build into larger positions. And so that's kind of the scenario we discussed in day 2. So if we look at the morning game plan notes from today, what we can see is we have these 3 resistance levels. And so the reason why I actually wanted to talk about the second day play, and by the way, a second day play is one where there was fresh news on day 1, and then based on the levels and the information we established on day 1, we can make a trade on day 2. So the thing that was interesting about this one, and why I really wanted to talk about it, was the pattern that actually established itself on day 2 was what we call a strong opening drive. So if you look at this chart, you can see that I've labeled the resistance levels, and in that first 30 minutes, when a lot of volume is coming in, it actually blows through the resistance levels we highlighted in the game plan sheet. And so that's what we call a strong opening drive. When something has a strong opening drive, and this can be to the downside or the upside, when it has a strong opening drive, what we look for is then some sort of consolidation above a level when it's a strong drive to the upside, and we look for that consolidation, and for the rest of the day we can look for it to trend. And so that's actually why I wanted to share this one with you. And then also, great job to the person who reached out to me on Twitter. They were happy. Here was the tweet that they sent me. They were happy that they wrote down their notes, their levels from the morning meeting. But I want a word of caution for the younger traders out there. So what happens is sometimes is a trade like this works out, and a less experienced trader mistakenly believes perhaps the trade worked out for other reasons than why it really worked out. And they're thinking, okay, this thing gapped up on day 1. I'm going to just get these things on day 2, and I'm going to make all this money. If you really look at it and you think about what happened here, like look at the price action on day 2. It in the first 15 minutes, it drove through all these key resistance levels on volume. and then it held above those levels. So it wasn't like, you showed up on day two and just said, oh, the stock's, it's above $46 a share. I'm buying it and it's going to go to 54, 55 or whatever it went to. It's that the volume came in that first 10 or 15 minutes, took out R2, eventually was able to take out R3, stabilize and hold above. That's the price action that you're looking for. And whether that's a long setup or a short setup on day two, is you want to see the volume come in, the speed of taking out those levels that you've established where potentially there could be some supply, and went right through and then held above, consolidated for over 20 minutes, and then you got your trend.